As the sun rose over Stuttgart on a crisp February morning in 2025, the sprawling Mercedes-Benz headquarters stood as a testament to automotive innovation and luxury. Yet, behind its gleaming facade, a storm was brewing. The German automaker, long synonymous with prestige and engineering excellence, found itself navigating treacherous waters in a rapidly changing global market. The previous year had been a wake-up call for Mercedes-Benz. In 2024, the company watched its profits plummet by a staggering 30.8%, settling at $13.6 billion. This sharp decline sent shockwaves through the industry and left investors questioning the future of the iconic brand. The company's revenues had also taken a hit, shrinking by 4.5% to $145.6 billion. Perhaps most alarming was the drop in profit margin for car production, which fell from a robust 12.6% in 2023 to a concerning 8.1% by the end of 2024. As news of these financial struggles spread, the automotive world held its breath, wondering how the luxury car giant would respond. The answer came swiftly and decisively. Mercedes-Benz announced that 2025 would be even more challenging. This bold admission sent ripples through stock markets and boardrooms alike, as analysts scrambled to understand the implications for the broader automotive sector. The company's forecast for 2025 painted a sobering picture. Group revenue was expected to dip slightly below 2024 levels, while Group EBIT, earnings before interest and taxes, was projected to fall significantly. The free cash flow from industrial business, a key indicator of financial health, was also anticipated to drop substantially. Most worryingly, the automotive margin, a crucial metric for profitability, could potentially plummet to as low as 6%, a figure that would have been unthinkable just a few years earlier. As industry insiders and financial experts dissected these projections, a complex tapestry of challenges emerged. The global economic landscape had shifted dramatically, with weakening macroeconomic conditions putting pressure on luxury goods markets worldwide. Competition in the automotive sector had intensified, particularly in Asia, where emerging brands were challenging established players with innovative designs and competitive pricing. China, once a golden goose for luxury automakers, was now a source of concern. The Middle Kingdom's appetite for high-end vehicles had waned, with changing consumer preferences and economic uncertainties dampening demand for Mercedes-Benz's most profitable models. This slowdown in the world's largest automotive market sent shockwaves through the company's global operations, forcing a re-evaluation of production targets and marketing strategies. Adding to these woes were ongoing trade tensions and the looming specter of potential tariffs, particularly with the United States. The geopolitical chess game between major powers had created an atmosphere of uncertainty, making long-term planning a Herculean task for multinational corporations like Mercedes-Benz. Every tweet, every policy shift, and every diplomatic spat had the potential to disrupt carefully laid plans and impact bottom lines. Inside the company's production facilities, another battle was being fought. Rising costs of raw materials, energy, and labor were putting unprecedented pressure on profit margins. The transition to electric vehicles, while necessary for long-term sustainability, required massive investments in new technologies and production lines. These costs were difficult to pass on to consumers in a competitive market, further squeezing profitability. As the gravity of the situation became clear, Mercedes-Benz's leadership knew that bold action was required. In a move that underscored the severity of the challenges ahead, the company unveiled an ambitious cost-cutting plan aimed at slashing production costs by 10% through 2027. This strategy would require a delicate balance, trimming fat without compromising the quality and innovation that had defined the brand for decades. Part of this plan involved a strategic pivot in the company's product lineup. Mercedes-Benz announced its intention to focus more heavily on exclusive and profitable models, doubling down on the high-end luxury segment where its brand cachet still held significant sway. Simultaneously, production of cheaper models like the A-Class would be scaled back, a decision that sparked debate about the company's long-term market positioning. This shift in focus was not without its risks. By concentrating on the upper echelons of the market, Mercedes-Benz was potentially leaving itself vulnerable to fluctuations in luxury spending and missing out on the volume sales that had helped stabilize revenues in the past. However, company executives argued that this move would allow them to play to their strengths and maintain the brand's premium image in an increasingly crowded marketplace. Despite the gloomy short-term outlook, Mercedes-Benz was not battening down the hatches entirely. In a move that raised eyebrows among some analysts, the company announced plans to increase investments in property, plant, and equipment significantly above 2024 levels of $3.4 billion. This decision signaled a long-term vision that looked beyond the immediate challenges, positioning the company for future growth and innovation. These investments were largely focused on adapting to the seismic shifts occurring in the automotive industry. The rise of electric vehicles, autonomous driving technologies, and connected car platforms required massive capital outlays to remain competitive. By committing to these investments even in the face of financial pressures, Mercedes-Benz was making a calculated bet on its ability to lead in the automotive landscape of the future. As news of Mercedes-Benz's struggles and strategic shifts reverberated through the industry, competitors watched closely, knowing that the German giant's fortunes could be a bellwether for the sector as a whole. The challenges facing Mercedes-Benz were not unique. Shifting consumer preferences, technological disruption, and economic uncertainties were impacting automakers across the board. In boardrooms from Detroit to Tokyo, executives pored over Mercedes-Benz's announcements, looking for insights that could inform their own strategies. The luxury automakers' focus on high-end models and cost-cutting measures sparked debates about the best path forward in an industry undergoing rapid transformation. Some saw Mercedes-Benz's moves as a template to follow, while others viewed them as an opportunity to gain market share in segments the German company was de-emphasizing. For workers in Mercedes-Benz's factories and offices around the world, the company's announcements brought a mix of anxiety and determination. The specter of cost-cutting loomed large, with many wondering how it would impact their jobs and communities. Yet there was also a sense of pride and resilience, a belief that the company that had weathered 2 world wars and countless economic cycles would find a way to adapt and thrive once again. In Stuttgart, where Mercedes-Benz's roots run deep, the company's challenges were felt acutely. Local businesses that had long benefited from the automaker's success braced for potential ripple effects. City officials began exploring ways to diversify the local economy, recognizing the risks of over-reliance on a single industry giant. As 2025 unfolded, all eyes remained on Mercedes-Benz. Each quarterly report was scrutinized for signs of improvement or further decline. The company's ability to navigate this period of turbulence would not only shape its own future, but could also influence the trajectory of the entire automotive industry. Industry analysts debated whether Mercedes-Benz's struggles were a temporary setback or a sign of deeper structural issues in the luxury automotive market. Some pointed to the cyclical nature of the industry, arguing that the current downturn was simply part of a natural ebb and flow. Others saw it as a watershed moment, marking the end of an era dominated by traditional combustion engine vehicles and the beginning of a new age of mobility. Environmental concerns added another layer of complexity to Mercedes-Benz's challenges. As governments around the world tightened emissions regulations and set ambitious targets for the transition to electric vehicles, the pressure to innovate and adapt intensified. Mercedes-Benz's investments in electric vehicle technology were now more crucial than ever, but the path to profitability in this new arena remained uncertain. The company's struggles also sparked broader discussions about the future of manufacturing. In developed economies, Mercedes-Benz had long been a symbol of German engineering prowess and industrial might. Its current difficulties raised questions about the sustainability of high-cost manufacturing in an era of global competition and rapidly evolving technologies. As the year progressed, Mercedes-Benz's leadership worked tirelessly to implement their strategic plan. Cost-cutting measures were rolled out across the organization, from streamlining supply chains to optimizing production processes. The shift towards more exclusive models began to take shape, with new designs and concepts unveiled to much fanfare at international auto shows. Yet the road ahead remained fraught with challenges. Each decision, each product launch, and each financial report was scrutinized by a global audience of consumers, investors, and industry watchers. The pressure to deliver results while simultaneously investing in the future was immense, testing the mettle of even the most seasoned executives. Throughout this period of upheaval, Mercedes-Benz's brand remained a powerful asset. The three-pointed star continued to evoke images of luxury, performance, and innovation in the minds of consumers worldwide. This brand equity provided a foundation upon which the company could build its recovery, even as it navigated the stormy waters of industry transformation. As 2025 drew to a close, the full impact of Mercedes-Benz's strategic shifts and the broader market challenges remained to be seen. The company's journey through this period of turbulence would undoubtedly shape its identity for years to come. For the automotive industry as a whole, Mercedes-Benz's experience served as a case study in adapting to change, balancing short-term pressures with long-term vision, and maintaining brand integrity in the face of financial headwinds. The story of Mercedes-Benz in 2025 was far from over. It was a tale of resilience, innovation, and the relentless pursuit of excellence in the face of adversity. As the company looked to the future, it carried with it the weight of its storied past and the hopes of an industry in transition. The road ahead was uncertain, but for Mercedes-Benz, the journey had always been as important as the destination.